It is Arjun here, and I'm the head of research at InvestorKit Buyers Agency. If it's your first time tuning in, we make videos like these on a weekly basis, and they're all about sharing successes, stories from real people, real investors, going out there hustling hard, buying 1, 2, 3, or in some cases 9 properties, 10 properties. So each to their own, but we're here as part of that journey to work with people to do that. And so if you've been here multiple times and checked out some of the case studies in the past, well, each story, each person's very different. So I've got Simon, a dear friend, in front of me here. We'll be chatting about his journey, working with us, property investing, building up a portfolio, and some of the learnings and challenges along the way. So keen to go through this, and welcome, Simon.
Thank you, Arjun. Thank you for the introduction. And it's been extraordinarily exciting to not only be on my little property investment journey, but watching you, Arjun, watching you grow. I think I was probably one of the first 10 or 15. I'm not sure. There wasn't too many, but I was one of the first few. I know I was one of the first in the first year anyway. Listening to the property investment podcast, and I heard you come on a couple of times, and I thought to myself, "Ooh, I like this guy. I like how he talks." And yeah, I'll never forget just telling myself, you know what, I'm just gonna call this InvestorKit number and see who picks up. And I was actually driving my car.
That was back in the days where I'd be like, "Hello, this is Arjun's receptionist speaking here," trying to make myself look very important and feel very important. You're definitely back in the day. You know, our friendship goes, back to that day. And but yeah, look, first, the elephant in the room. I want to call out that scooter you got in the back.
I'm sorry. I'll get rid of it.
Yeah, no, for any of my, don't need to get rid of it, man. But for any of my fellow Sydney-siders who know that we feel the pain. The scooters aren't allowed in Sydney, but they're fully allowed in old Queensland where Simon is. So he's showing off to all you Sydney-siders and fellow Sydney-siders that can't get any scooters. There you go. Simon drives that around with no issues.
Yep, no issues. But I have to say it is fairly dangerous. It is dangerous. People come off them all the time.
Man,
and it's really unclear on whether you're supposed to drive in like a bicycle lane or a footpath, because apparently like the Queensland law is saying that you got to drive on the road, but on a bike path. But on the manual, like on the that one's a 9bot Segway or something, the brand. And on the manual, it says, make sure you drive just on the footpath and not on the road. So it's contradicting.
Yeah. Man, look, whatever it is, it's fun. I know it's fun. Yeah. I'm always driving scooter around those in Queensland when I go there.
Yeah.
But man, another thing I noticed is very Queensland is the white on white on white. The shirt white, the headphones white, the paint white, the rose white. Looking fresh as always, Simon.
Oh, mate, it was actually not intentional at all. No, I didn't even think about that. That's my son's drawers, and his little coats hanging up there.
Well, man, let's take it back to day one, because I know you were talking a little bit about the story about reaching out, but you know what actually is even more special? Not the reach out and not us connecting, all that. That's great. But what was more special was people, whether it was them or whether it was you, but said no, as in, I don't think you're ready yet, Simon, to maybe buy something just yet, or maybe you hadn't put enough funds away, or maybe you felt like it was a bit early. And when we connected, it was very much a different, no, let's get started to get something more affordable rather than opportunity cost of not getting started at all. Do you want to take us back to that thinking back when you were thinking about your first place? And
yeah. Well, I'll finish off with that phone call.
Yeah, done. Let's do that.
So I decided to, for whatever reason, call you as I was coming out of my car park on Bluetooth, of course. I was driving somewhere. I forget where I was going. And I was driving down my driveway and you picked up and you like, I think you even said, hi, Arjun speaking from InvestorKit, something like that. I was like, Arjun's here, pull over. So I pulled over the side of the road, even though it was on Bluetooth. And I was like, my heart was pumping, thinking, bloody hell, this genius that's been on these podcasts that I'm listening to is talking to me. I didn't think, like, I thought for sure I'd get a hi, it's Arjun's receptionist talking. Something like that. Yeah.
Me pretending to be the one-man
Yeah,
team at the start.
absolutely. But no, I was very fortunate to have you pick up and just talk to you. And it's really hard for me to spend money. I'm a frugal man, and as you probably know, I still don't, but I didn't have a huge amount of money saved, and you made me feel like there was no pressure whatsoever. You spoke to me for about 40 minutes, 45 minutes, and not once did you really try and sell anything. You just were trying to make me feel comfortable, with explain the procedure, explain the costs involved, explain why you think it's a good idea. But at no point whatsoever did you follow up. Hey, just following and making sure did you want to sign up? That type of feeling where it's like you feel pressured and almost obligated, and then you sometimes that can cause buyer's remorse, and then it leaves a bitter taste, especially when you're spending that type of money. For me anyway, it was a lot of money. And yeah, just to answer your question in regards to getting mixed feedback from family members and friends, I think it's because back then a buyer's agency, particularly in Australia, was quite a new concept in real estate, and people weren't really familiar with it. There was that, and then just trying to grasp the amount of money that it was going to come out of upfront, in comparison to how much I had saved. And as I explained to you, and I was quite upfront with you, is that it's quite a large percentage of my savings. And boy, oh boy, do I not regret at all biting the bullet and accepting the terms of the buyer's agency and going through Arjun Paliwal, number one. I tell everyone. And mate, looking back at the 2 purchases that I've made through you, and soon to be the 3rd, I'm sure, probably mid next year. It's like it's now a no-brainer, and now I can tell all those doubters that the money that I spent and how I really justified to myself, as well as my argument to them prior to even this success, is I said, listen, I needed to put my ego aside in thinking that, I listen to a podcast once or twice a week and go on realestate.com.au every now and then. At the time I was kind of into it, compared to someone that all they do is study this. That is their expertise. And if I just put that ego to the side and think of, I'm purchasing a property based on holding it for 20 to 30 years or even longer, long-term hold, right? So that amount of money to the upfront money to pay the buyer's agent, if you look in 20 years trajectory, the percentage that is to what you could potentially make on capital gains, for the right decision compared to the wrong decision, that's how I justified it. I thought to myself, if anyone's going to make the right decision, it's going to be you. And that's what I had to do. So that's what justified it.
Even before like the buyer's agent, the property, and I appreciate you getting and sharing about like how the family and the friends and their thoughts at that time. But I recall a conversation between us, and this is something that I think is one of the most important concepts whenever I think of your journey. I think of, okay, there was a deposit towards the first property, right? And the first property was extremely affordable in the grand scheme of things, looking back now, right? I think it was mid to high 200,000s that we'd spent, 260.
260.
There you go. So firstly, how crazy does it sound to buy a house for
I know, crazy.
$260,000?
Yeah,
Right?
yeah.
That too in a major city. I mean, I know capital doesn't stand for capital growth in capital city, but 260,000 in Brisbane back then.
That is in
Like,
Ipswich. In Ipswich.
correct.
Yeah, yeah.
Now, what the power behind that purchase is that many people, the stigma of certain areas, the stigma of buying affordable and, versus buying blue chip or buying expensive properties. The idea was that at that time, many would have said, don't buy, save more. How do you feel about the majority advice at that time and, earn more, save more, go for more, versus you being able to get in and essentially have equity growth to see a house worth well into the 400,000s now, and very difficult to save that amount of money in the gap over the last couple of years, right? So how do you feel reflecting back on that journey of one should get into the market versus waiting for all perfect things of income, savings, and high purchase prices to get in?
Yeah, well, I think I can quote Phil Tarrant is it's not about the timing of the market, it's time in the market, and I think that's a really good time to quote that, and it was true. But Arjun, I have to give you props, mate. That I mean, obviously the property market has gone crazy over the last few years, and that it was probably difficult to make the wrong decision looking back. But your decision in comparison to all the right decisions is still on this on the upper end of results, right? As in the growth, it was higher than the average growth. Even though the average growth was really high, it was still higher. So in that way, it was the correct decision. And then yeah, I mean, I didn't even think I had enough. I think that was a just conversation that we even had. I said, listen, mate, I've only got this much. Is that like, would you even be interested in working with me with that? And you said absolutely. Another thing that I felt was you just made me feel so comfortable about, because it can be a bit of a you show a little bit of vulnerability by showing, I'm not a multimillionaire here, but can I get into the property investing? And the answer is very clear. It's yes. Obviously a little harder now, but everyone out there, if you're not sure, this man here on the screen, Arjun Paliwal, he'll find a place for you, I'm sure. So don't worry about it. Whatever you have, if it's a $30,000-$40,000 deposit, Arjun Paliwal will find you the right place. I promise you that. So get in touch with him. And that's a plug that he didn't ask me to do.
I did not. As long as you accept credit card, I'm in, man. So
this is not a paid video. quit put in your disclaimers.
Well, I'm thankful for that disclaimer right there. But no, look, I obviously I think that was a very important piece of the whole journey, was the fact that you trusted the idea that, hey, look, we're talking 260K in that time. Obviously, we felt there were growth drivers. There was, limited supply in this particular suburb, right? Ipswich has many areas that the supply is coming, buildings happening, but this suburb is established. It's fully built out. It's a higher owner-occupier ratio, low vacancy rates, and all the trends were in the right direction. There was a gem within the area, but I guess moving on from the first purchase, we firstly saw high growth, a property worth $200,000 more today. Number two is we saw good rents, good cash flow, but then more importantly now is the purpose of that first property was to be able to generate equity, outpace how much you could save, so you could use equity to create a buffer and also go for the next one. So talk about the feeling that was going through your mind where just a year or two earlier, you're like, I don't even know if I can get the first, to now brainstorming and strategizing with me about how we go for the second.
Yeah. Well, I didn't even really quite understand the concept of equity and how you can use it. And I remember you called up, I think it was just a follow-up call, maybe a year in. I think that's exactly what it was. It was our yearly I'm pretty sure you schedule yearly catch-ups with
That's right.
most of your clients anyway. I'm not sure if it's all, but definitely with me anyway. So I do appreciate that. And we discussed it, and you said to me that equity you can literally purchase your next property off your equity. And the only cash that you'll be out of is obviously the buyer's agent fee, and then it was like the solicitor's fee, and like pest and billing or something. It was like nothing. It was like it was crazy to think that I could purchase a second property off the equity made on the first with such a small amount of cash.
That's unreal, right? And I think that feeling there, how does it feel on the second time though, after having purchased the first and the results were there? What was going through your mind the second time? Because just from
yeah.
my learning, your questions halved, your decision making doubled in speed, and your, I guess, just aura of comfort around you changed completely as well. So what was going through your mind now, talking about the process of the second, right? And how buying a second property and your mindset going into that versus buying the first, and just want to understand what you were thinking.
Yeah, sure. Well, obviously with the first, it was a huge learning process, both for me, both for a buyer's agent, first property, obviously nervous, not knowing what 80% of what we're doing was, haven't even heard of it. So I'm quite a curious person. So I do ask a lot of questions. Going into the second one, we had already covered it. It was just basically a rinse and repeat. And that's really what it was. And a rinse and repeat and 100% trust. And I completely trust you now. I trust you. I'm gonna, yeah, as you know, I trust you so much, and you're not only an incredible investor, or should I say, at your job, but you're an incredible human being, Arjun. And I think that's something that not everyone gets to experience and understand, because we've met up face to face on many occasions, and we do obviously relate to quite a lot of hobbies and stuff like that, which does help. But even watching some of the things that even your partner and yourself do for the community, the posts about your family, you've obviously gone through some heartbreak as well, and just how you've dealt with all of that is just shows me you're a beautiful human being, mate, and that means a lot to me anyway. Dealing with business and trusting people with my money, and purchasing the right place, that means a lot to me. The person that you're trusting, and I think if anyone out there is unsure of what the buyer's agent to go with, then go off personality, go off what you feel, and it's very hard not to feel comfortable and feel that you're a good man, Arjun. And I know that you only want the best for all your clients, and that's the absolute truth.
Oh man, thank you, dude. No, really, really appreciate that. And
Yeah, no, it's the truth. I've spoken to you about this a couple times.
nah, look,
And you're
it's
a beautiful
special
man.
it's special each time you say that as well, man. Appreciate it. But when you see all this growth in equity now, and looking back in property investing, how has it changed your future outlook in terms of what your goals are? Has that changed any sort of aspects of your goal setting personally? Has that changed you from being a cheap ass to like to maybe a little bit more open and less frugal? What feelings has it given you since then?
Not sure how to sum it all up. I'm not sure how to answer that, Arjun. Other than I am probably a little less frugal now than I was before. I'm still following the really strict saving process that we put in place, and I'm definitely planning on a third property. And then I'm not sure. I'm not sure if I want to try and pay down the three properties, or just keep on trying to accumulate? I'm just not sure. So my strategy in property investing stops at 3. And well, in terms of trying to accumulate and like a replan after the 3rd,
Yeah.
because I really don't know what to do really, or where to go from there. Particularly because I'm so stable in my job. Unfortunately, stability in a job often doesn't mean that there's much uh like opportunity to have a pay rise or something like that. So I'm a little bit worried about that. So I've started a side business that I'm really excited about. And yeah, don't want to give too much away actually. Someone's already copied me. I'm so angry.
Look, man, it's all about execution, not copying. So people can copy all they like. I know you'll execute better than anyone. So,
yeah,
no, but
I'm
look, I
trying.
mean, it showcases the fact that maybe there's a bit more go with the flow as you've kind of seen and enjoyed some of the good results, and that's exciting to see, because it also means there's weight off shoulder of having too much planning in your mind and having too much thought in mind. But mate, looking back at the two investments now, how do you feel did you ever look back and feel like you needed to be extremely educated on these things, or do you feel like, well, I have a team and I'd prefer to build a team around me, or a combination of both? What's sort of been like your experience now incorporating, this experience that you're gaining in property investing, and how you kind of look at it all?
Yeah, that's a great question, Arjun, and it's funny because I think it works for for people. It works the absolute opposite way, or like, sorry, you either become absolutely obsessed with property investing to the point where you like I'm sure some of your clients have turned into maybe even buyers agents, or I'm not sure, I can't vouch for that, but
Whole
I know.
bunch, a whole
Oh
bunch
yeah, there we
actually.
go,
I love
exactly.
it. It's great.
Or the opposite. And funny enough, I've gone the opposite. I don't listen to the podcasts as frequently. I only listen to your podcasts, and sometimes, something that really strikes my interest or something I can relate to. Like if it's something that says like 30 properties in 4 years, I'm like, yeah, I'm not going to listen to that. Like that's just not whatever journey that person's had isn't on my level, so I can't relate to that. But yeah, I don't go on websites anymore. So in terms of what to answer your question, I've gone the opposite, and I've decided that I'd rather leave it up to the professionals and save my time for other things like my family or my hobbies or other things like that. So that's why I don't see myself really ever purchasing not through a buyer's agent.
Well,
And yeah.
Simon, mate, I think that's exactly what you wanted as well, right? At the start, in terms of getting time back, having the mental pressure of all of these wealth building things off of your plate. And it's great to see that you actually say this, because that's the first time I've asked you that. So it's great to see it actually like coming off your plate as you wanted it to be at the start. Mate, I think when I look back at the investing journey that you've been on, firstly, it also happened, as in your second acquisition, during a time where it was pretty uncertain for most of the world, if not everyone. And I know you've thrived in stability in terms of, or have seen comfort and stability around the job that you mentioned as an example. What was making you kind of go, no, I'm going to step out of the comfort zones to get the second property? Because look, there might be many out there with two properties. That's not the story we're looking at now. It's the decision making I'm trying to understand,
The
because
decision making,
something
Arjun,
there.
was simple, and it gives you more incentive to do the follow up call. The follow up call 1 year later was, hey mate, we've crunched the numbers. This is how much your property is worth. We can refinance. I suggest refinancing. Blah 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 blah. Long story short, I'm sitting on all this money on equity and can use it to buy the second property. So I was just like, this is like a no brainer. And yeah, the wealthiest people. I have quite a large family. I've got 33 cousins and a whole bunch of auntie and aunt. Yeah, I'm almost taking the Indians on there, man.
Yeah, man.
Yeah. Anyway, I have the complete spectrum of wealth. I have sadly family members in and out of jail, and I've got family members with a very, very successful business people. One of the guys is the person I introduced you kind of online. Remember I said my cousin?
Yeah.
He's a very successful businessman. And you know, his parents are actually the ones that are probably one of the most successful. And I've watched them, and most of their wealth has come from property investing. And that's the case for so many people. And I remember seeing a pie graph one time of the top, I think it was the top 100 richest people in the world. I think it was a Forbes 100, and it listed where their wealth came from, and like 70-80% of them was from property.
It's massive.
It's massive. So
Yeah.
it's like, so if it's working for all these people, why is it not going to work for you?
And so, Simon, I
Especially
just
if you're getting Arjun Paliwal to pick your properties.
Mate,
Maybe.
I want to say a massive thank you for today, man. It's been a lot of great value that you shared. The biggest takeouts, you know, for anyone tuning in, just the biggest takeouts for me were around get started. You know, there are many people who think it's too early, it's not the right time, save up more, earn more. But you've shown a perfect example of busting all the myths around demographics, socio-demographics of property markets, affordability, price points, blue chip, different things. Like, it's better to get started because these markets in the long term outperform most people's savings rates. So that was the first and big tip I took out. The second one was you don't need to have all the mental pressure or education or know it all of property investing. You can support yourself with teams around you, like our team. And once you get it right once, it gets easier as time goes on because you spend time where you want to spend it with family and loved ones. And the final piece of that is also how you value the investment. You brought it to a microscopic piece once you put property into the long-term perspective. So, mate, that was a lot of value points, and just seeing you operate, make decisions, aspire from 1 to 2 to 3, utilize equity, utilize all these principles that achieve property investing success. It's been great to see. I've enjoyed our friendship and many laughs along the way. And for anyone, tuning in, as Simon mentioned, InvestorKit team, don't forget your 12 monthly follow-up calls to clients. As Simon said, it was very important, and that was the X factor. That was the X factor. So we'll definitely continue our 12 monthly calls with clients and make sure they're in a good place. So thank you, Simon. Appreciate it.
Yeah, thank you so much for inviting me on, Arjun, and all the best as always, mate.
Cheers.
See ya, mate.